Welcome back. It's Simply Bitcoin. We break down the news from Twitter, the daily fail, the meme review, software releases, hardware releases, websites by plebes or plebs. Drop us a like, subscribe. Today, we've got a very special guest, fellow Bitcoiner, and working currently at Unchained Capital, Phil Geiger. Is that pronounced correctly?
That's correct.
Sweet.
Thanks so much for having me, guys.
Cool.
And I'm always excited to meet another Bitcoin Phil. I think there's 3 of us that I know now, and we're gonna go after those Bens.
Yeah, you have to. You guys have to take down the Bens. The Phil versus the Bens.
They're a menace to society.
Oh my god.
Okay, let's go. We're going into the numbers. Even though we're having fun already, we do have to bore everyone with the numbers. Let's do it.
Number time.
At the time of this recording, the block height is 692,057. The Bitcoin price, 31,745. Chain rewrite days, 1,071. I'm already excited. Total public lightning capacity, another all-time high, 1,907.74. Bitcoin versus gold market cap, 5.5%. And sats per dollar, 3,150. I said a terrible number.
Oh my god. But dude, bro, I'm gonna keep saying what I keep saying, man. It's the signal is the lightning network capacity just keeps going up. Price is just noise at this point, man. And cheaper sats to stack. But anyway, yep, you just say something, Phil?
No.
Okay. Anyway,
man,
so,
I love just seeing the hash rate starting to recover after the great Chinese exodus.
Yeah, man.
So it's like
it's so good to see that, dude, honestly. But you know what doesn't kill Bitcoin makes it stronger, and I think that it was unprecedented what happened. Man,
I just think that the CCP is a great friend of Bitcoin, doing their best to decentralize the network and make it more strong. So
dude,
thanks, Z.
I tweeted that same thing the other day. I was like, who's gonna tell the CCP they made Bitcoin stronger? But yeah, man, I agree. They're definitely gonna pay the price in the future. But anyways, Phil, it's time for
the daily fail. So they explain, how the block, how the rewards are done in ETH. Okay, you got a block reward, the transaction fees, the miner rewards. Okay, so essentially what's happening is that they are gonna start to lose, if I'm not mistaken, I think the transaction fees. Anyways, let's dive into it. As explained above, currently the transaction fees are rewarded to the miners. This way, the Ethereum coin supply and circulation is only growing and technically causing inflation. Ah, yes, it's because of this. We're going to blame the miners. The miners are causing inflation, even though the miners in Bitcoin don't cause it. It doesn't matter. It's okay. It's semantics here. Okay. The proposal will not affect mining as it is. Oh, okay. It will most likely affect the profitability of mining. So it sounds like it freaking affects mining, okay, as it is. See, I'm telling you, man, it makes no sense. All right. After the London fork, the fees will be burned at the miners will not receive them as they did before. Okay. The general mining profitability should not change dramatically as Ethereum will be burned. This is great. This will lower a circulating supply and should, in theory, provoke a price increase. I mean, are you freaking kidding me? Is that like, and they just write that like it makes sense, right? Like that just made sense. Sure. Really?
I'm going to keep saying it. I'm going to keep hammering my point that I keep saying on this show. The proof of stake people sound like goddamn communists, bro. And the people the people behind Ethereum, because they want to migrate to proof of stake. Obviously, they don't understand work, right? Anyways, but yeah, man, and this shows, if you look at the Ethereum hash rate, there's a reason that it stays steady. And the reason is because no one wants to invest in miners if you have those types of fucking proposals, right? So yeah, man, look, another example of why Ethereum is just shit. And my last point is that, man, look, and I keep repeating this, right? Because you just have to tell this to anyone that supports Ethereum and it'll make their head blow up. If AWS decided to shut down all the Ethereum nodes, they would probably take down the Ethereum blockchain or the Ethereum network, okay? So it's man, it's not decentralized. They have garbage proposals, and they want to move to proof of stake, which we already know doesn't work. But anyways, Phil Geiger.
Yeah, well, you mentioned this is the fail of the week, but really, Ethereum is kind of the fail of the last 5 years or the fail of the decade. I mean, this is just a joke project that is built on pure hype and pure marketing. So of course they're going to market this change as now ultrasound money, and it doesn't impact miners, but it does impact the profitability of miners. It's all just kind of double speak, and it doesn't make any sense. If you take a step back and look at it, like nothing that they're actually talking about is going to drive the success of Ethereum. Like what it's doing is it's making miners less profitable, which is going to make them point their hash rate somewhere else, which is going to reduce the security of the network. But most importantly, none of this matters because the people who are holding Ethereum are just holding it to make more dollars. Bitcoiners have adopted Bitcoin as their monetary reserve, their new money. And they're not going to go back to dollars over the long run. Like that's why we get into Bitcoin. We're adopting a new monetary system. The Ethereans, they don't care about that. They're looking at, they live in a fiat world. They're producing this thing to generate more dollars or more Bitcoin, but it just doesn't matter. It's all just marketing and hype, and it's going to continue to blow up. I mean, companies are going to continue to drop support for Ethereum, and it just doesn't have any future, in my opinion.
I completely agree. What about you?
I just want to throw in one last thing, okay? Just to remind everyone, there's no hard cap on Ethereum, okay? So it makes no difference that they're going to burn tokens. They could burn all the tokens in the world. Who cares? This is the BS, right? This is the same thing as our current monetary system. Do you think it matters that there's pallets of cash that they set on fire every single day? You think it matters? Yeah, keeping the supply in check.
And correct me if I'm wrong, bro. I don't think one person, because I know Bitcoin Twitter made a big deal out of this, but I don't think anyone has been able to check Ethereum's supply since that was a thing. I don't think anyone stepped up and was like, this is how you do it.
They're working on it. Pierre's paying for it, okay? Yeah, you gotta, no, I don't know if he's still paying for it, but I remember that at one point he offered to pay to help them to figure this out.
That's ridiculous.
Anyway.
It's ridiculous. Anyways,
if you're speculating on Ethereum, you're just trying to make more dollars, is my perspective. Like, and the smart ones are converting their Ethereum into Bitcoin because that's a denominator, 21 million, right? You can actually protect your wealth that you've captured. But with Ethereum, yeah, it's Ethereum.
You hear that, guys? If you hold Ethereum, have fun staying poor. Anyways, Phil, it's time for
the Daily Meme Review.
Okay, I'm not even going to do a countdown because those reactions were just so genuine. Current stage of the super cycle.
That's freaking awesome.
Look, it was simple. It was gold. It made sense. I think everyone understands that. And for that, I'm going to take this very painful turmeric shot. What about you, Phil?
Oh my gosh. That is just absolutely brutal, man. Yeah, no, that was priceless. Absolutely priceless. And it does feel like that sometimes, right? It does kind of feel like that. But yes, it really does. I think it does underlie the the sentiment. And with that, I'm giving it something pretty crazy, or maybe not. Who knows? Okay, I am going with my multimeter.
Oh, one of Phil's electronics. You have so many of those.
Plastic.
Okay. Geiger, what are you going to give that meme?
Well, this meme really speaks to me on a personal level because I do love cycling and mountain biking and riding my city bike. And so when I saw that bike just crumpled up against the wall there, it related to me and really hit home. So yeah, I think for this meme, I will give it 47 Elon Musks, and I'll throw in a Jeff Bezos and Richard Branson.
Damn, bro.
I don't think anybody's given anything like
bro,
that.
Those
That's
are
awesome.
those okay. Those are some excellent scores. Excellent scores.
Yeah, big,
very
Respect.
big. That's for sure.
big scores.
Anyways, Phil, it's time for
The Daily News, sponsored by
Crypto Cloaks.
All right, everybody. We have a very special guest today, and I would consider him very knowledgeable on multisig and I want him to talk about it. So here's just this article from CoinDesk. Multisig wallets can keep your coins safer, and then parentheses if you use them right. I think that's very important, by the way, because you can make a mistake setting up a multisig wallet. So Phil, why don't you explain to everybody, the importance of multisig and the importance of multisig. Let's start with that.
Yeah,
sure. Well, we'll talk about what's similar between multisig and single sig. So first and foremost, a multi-signature address from the outside looks the same as a single signature address. So if you have a hardware wallet already and you're holding the keys to your Bitcoin addresses, you can use a hardware wallet to build a multi-signature address, and it looks like just any other Bitcoin address. The big difference between a multi-signature address and a single signature address is that a multi-signature address is built from multiple keys. So when your hardware wallet is kind of one of one keys to a single signature address, your same hardware wallet could be one of, for example, 3 keys to a multi-signature address. Now, why do you want to go through the trouble of building a Bitcoin address with multiple keys? Well, it eliminates all single points of failure. So when you're holding your keys in self-custody in a single signature wallet where your hardware wallet is one of one keys, the device and your seed backup are both single points of failure for your wallet. Now, a lot of people will say that adding a passphrase will help you to eliminate your seed as a single point of failure. And when I say seed, I'm referring to that set of 12 or 24 words. But the problem with a passphrase is that it's really adding an additional word to that word list and then becomes itself a single point of failure. So multisig eliminates single points of failure in a better way, in my perspective, than single signature wallets with a passphrase, because it's all native to the protocol. You're letting the Bitcoin protocol eliminate single points of failure for you. So you can build multi-signature wallets on your own. Say you're building a 2 of 3 wallet where you have all 3 keys. That's great. It eliminates your seeds and your devices as single points of failure. There's a little bit more information that you have to protect. Or you can build a multi-signature wallet with a partner. And this is what we call collaborative custody. So working with a company like Unchained, where we would hold 1 key, you would hold 2 keys, meaning you still have full and permissionless access to the Bitcoin network. You're not relying on our company to even exist. But at the same time, by inviting a company to hold a key in a multi-signature address, in a lot of ways, you eliminate yourself as a single point of failure. So with multi-sig, you can eliminate your seeds, your devices as single points of failure, but it's really hard to just eliminate yourself. But with collaborative custody, it makes it easier to eliminate yourself as a single point of failure. So if something happens to you, a loved one can bring 1 key and we can help to recover. And so that's really the benefit, I think, of the collaborative custody model, is you're inviting a financial partner in to help you out. Now, there are trade-offs, of course. Like if you're inviting any company to hold a key to your multi-signature address, they can see everything that's happening in the wallet. So definitely something to consider, but it is a good way. What I think is really cool is that, using Unchained, you can set up a self-directed IRA and move your retirement account into Bitcoin and hold the keys to your Bitcoin. So that's, I think, a great trade-off, because you have to report those holdings anyways to maintain the kind of tax advantages of a retirement account. But at the same time, you get the security of holding your own keys and multi-sig. So a bunch of different solutions that we have at Unchained for helping folks with multi-sig, but really, I think multi-sig is kind of the next step when you're thinking about your Bitcoin journey, right? You buy Bitcoin from an exchange, then you learn about self-custody and you try out single signature. But once the value of that Bitcoin kind of increases, you start to think, there's a lot of single points of failure here, and that's when you would want to start learning about multi-sig. So my team at Unchained is the concierge team, and we're happy to walk people through the entire process of learning multi-sig. But I do feel very strongly that when done correctly, it's actually, I think, the best way and easiest way to secure your Bitcoin, because nothing that you're protecting causes you to lose Bitcoin if you lose one portion of it. So you could even compromise an entire seed and your Bitcoin would be fine if that seed is being used to secure multi-sig Bitcoin.
I completely agree. And if you geographically separate the two seeds that you keep, then it literally becomes stronger than the fort that's supposedly, I mean, the gold that is supposedly at Fort Knox. Like that's like, that because in order for you to spend that Bitcoin, you'd literally need to physically travel to different locations, right? So yeah, man, it's just different kind of strategies on seed storage. Very interesting. The analogy that I kind of give to people is essentially like it's kind of like a safety deposit box. You need two keys in order to open that box, right? In the multisig, in case of what Phil was just talking about, in the 2 of 3, you would need at least two seeds in order to sign that Bitcoin transaction. So those two seeds would usually be on a hardware wallet, right? So you need to sign from one hardware wallet, you need to sign from another, and then that would allow you to spend the Bitcoin. But I know that some other Bitcoiners, they prefer single sig and they feel very comfortable doing that, right? So would you say multisig is essential?
So it's my perspective that once you get comfortable with multi-sig, you won't go back to single sig. Like if you're comfortable with single signature and you feel like you have your keys secured, then maybe don't use multi-sig. But what I would say is you should be really careful about what your single points of failure are. So in single sig, there is inherently a single point of failure because it's one key. So you can take your seed and kind of split it up into different locations. And that helps a little bit. But again, that's kind of like a human way to eliminate single points of failure, when the Bitcoin protocol will help you eliminate single points of failure natively by using multisig. That's kind of the entire benefit of multisig, is that it eliminates those single points of failure. That even happens in a 1 of 2 multisig wallet, where even in a 1 of 2, if somebody has your seed, they don't necessarily have the ability to find your multisig Bitcoin. In a single signature address, if they get your seed, they have your Bitcoin. And then, same thing. If you're adding a passphrase to a single signature wallet, it's really just changing your seed. So the passphrase itself becomes the critical single point of failure, where if you forget it, you're now no longer holding your key. So single signature just makes it very difficult to eliminate single points of failure. And I think most people that I speak with, they might feel like they are comfortable, but then when we talk through the exact kind of points of failure, they're like, oh, maybe I should think about multisig. And a good multisig setup, again, kind of, there's no physical or digital single points of failure. So I think it's really the most secure way to store pretty much anything. I can't think of any better form of security than one where there's no physical or digital single point of failure.
So I completely agree with you. I'm a huge fan of multi-sig, but I also know that other Bitcoiners, and I know that my Phil, speaks to a lot of Bitcoiners, right? And, he has a podcast, of course. And I know that there's a lot of people in the community that are hesitant. So my Phil, what do you think their hesitancy is?
I think it's overall comfort, but actually, you know what? While you've been talking about this and explaining it, right? By the way, fantastic job.
Thank you.
Made me feel more comfortable about trying it again. Anyways, but I wanted to ask you though, how would you characterize the essentially kind of the I guess you'd say the growth of people coming into multisig, and if you can share do you have any kind of insight as to the demographics? Because I'm very curious, who's, kind of stepping into that multi-sig arena.
Well, we help pretty much all demographics get started with multi-sig. So we will help people, taking control of keys for their very first time, get set up with multi-sig. And our team, my team, the concierge team, will actually send them devices if they want, walk them through setting up the devices, walk them through building the address, talk about all these points of failure and stuff like that. But it's my belief that, multisig is slightly, there's 1 or 2 additional things that you have to learn about in order to get comfortable with multisig than you'd have to learn about with single signature. And it makes you so much significantly more secure that it's I kind of feel it to be something somewhat inevitable as part of this journey. It's once you have eliminated all single points of failure for your Bitcoin, again, you don't really go back to a world where you're introducing single points of failure. So I guess just to highlight folks that we've helped, we help people who are longtime Bitcoin holders who are moving from single signature wallets into multi-sig because the value of their Bitcoin has increased so significantly that they can't sleep at night. We help people who are brand new to Bitcoin take control of their keys for the first time with multi-sig. And the reason I think that that's actually one of the best ways to start with Bitcoin, especially in this collaborative custody model, is because you're left with 4 physical items. You can lose or have 3 out of 4 of them be seriously compromised without losing your Bitcoin. That right there is the difference between single signature and multi-sig. With single sig, you lose your device or you lose your seed, your funds are done, right? Again, you have that passphrase and you take a fall. So I mountain bike, right? If I take a fall when I'm mountain biking and hit my head and forget my passphrase, I'm done. With multi-sig, there's like multiple things that have to go wrong at the same time for my funds to even be at any level of risk.
Exactly. And if you store them in a certain way, and if you really think about your seed storage strategy, like I really think like it is the most way to secure Bitcoin, in my opinion, of course. But Unchained Phil, I have one more question for you. So one of the hardest things that I've noticed, and I'm not trying to be ageist or anything, it's just that from my experience, I've been in Bitcoin for 5 years, is necessarily, so anyone over the age of 50, right, has a very hard time understanding this, right? And they have a very hard time understanding and more importantly, trusting, putting, vast amounts of wealth or energy onto Bitcoin. And this is just a step on top that they don't realize will make, their Bitcoin even more secure. But I see a lot of them even hesitant to that. They're like, whoa, that makes them feel even more uncomfortable. So since you work at the concierge at Unchained Capital, how has your strategy been with the older age groups?
Yeah, that is a great question. And we work with a lot of kind of older folks, like high net worth individuals or family offices that are making their first allocation into Bitcoin. And again, I kind of think that our model is the most kind of newbie friendly way to hold your own keys, because you're not at risk of loss if you lose just like one of those items. So for the older generation, they typically understand the value of holding their own keys, but to your point, they're hesitant because in single signature, if you make one mistake, you're toast, right? So our solution is actually, or really not, it's not our solution, it's multi-sig, which is native to Bitcoin, is really a great solution for folks like that. Because, as long as they have somebody walking them through the setup process and constructing the address, and just someone that they can call up to hop on the phone and, walk them through making deposits or transfers, they're more comfortable with holding their own keys because they like the idea of having kind of full control of their Bitcoin. So yeah, it's always a challenge to just work with the different demographics. But, one of the more challenging groups to work with, to be honest, is the long-term Bitcoin holder who is using a single signature hardware wallet and just has the wrong mental math. Like, a lot of people think that their Bitcoin lives on their hardware wallet, and that's just not the case, right? Bitcoin lives in addresses. Addresses are controlled by keys, and keys live on hardware wallets, right? So you can have an address with one key controlled by one hardware wallet, or an address with 3 keys where the hardware wallet is one of 3 keys. So just that like kind of mental model shift is sometimes a lot more challenging to get people to understand.
No, and I completely agree. It took me about a year to go down the multi-sig rabbit hole, and wow, I made so many mistakes along the way. So Unchained definitely walks you through that process, and yeah, man, super cool. But Phil, there was a software release today. Why don't you tell everybody about it?
Software releases. All right, everyone. We've got Sparrow Wallet version 1.4.3 that was released. That is a Bitcoin wallet, and the link to that is down below in the show notes.
Awesome. Thank you, Phil. All right, guys, that was our show. But before we go, I want to give a shout out to our awesome guest and the awesome company of Unchained Capital. And before I show the website or anything, guys, I want to make something very, very clear. Okay, on Simply Bitcoin, if we bring up any type of product or any type of company, the reason that we would ever even bring it on the show is because we've used it ourselves. In the case of Unchained Capital, I have used their vault product and I have used their loan product. I've used their loan product from A to Z, meaning I've closed out the loan. It was a great experience. And one of the things that they do differently than all the other companies that essentially offer a similar service, which is you give up Bitcoin and they give you, cash, right, as a loan, right, is that when you do a loan with Unchained Capital, they don't rehypothecate your Bitcoin. What does that mean? That means that if I send my Bitcoin to Unchained for them to custody it, right, to take it as collateral, they hold one key, I hold one key, and a third party holds another key, right? So it's a 2 of 3 multi-sig, and your Bitcoin stays there the entire time. It does not move, right? So Phil, did I get all that right?
Yeah, you nailed it. And just to talk about the reason why we do things the way that we do them with our loans, it eliminates, again, all single points of failure, right? So Unchained Capital could go under and you could work with the third party to recover your loan. It protects your Bitcoin from account hacks, right? If somebody breaks into your Unchained Capital account, doesn't matter unless they have keys. And even if they do have a key, we're not going to sign the second transaction without confirming with you that what you're trying to do. So that's just not the case with, many of our competitors where, you're giving up full control of your Bitcoin. They're commingling it with their other clients. They're taking those funds, they're lending them out, rehypothecating them. And, you always have to ask yourself, like, who's borrowing Bitcoin? What are they doing with that Bitcoin? A lot of times they're short selling Bitcoin. What happens when Bitcoin rips to the upside? Just be thinking about those things when you're giving up control of your keys. Now, loans still have a lot of price risk. You could get into a situation where Bitcoin crashes 40% and you're entering into a margin call. So be very careful and cautious with that. But at least with the Unchained loan, you're not at the same level of like custody or rehypothecation risk. So we think that we built it for ourselves. It's the only type of loan I would personally use if I was going to take a loan. And the reason we do it is to keep the Bitcoin safe for the long run, because we're working with clients and we want to be their financial partner for generations.
Yeah, and I took a short-term loan with Unchained to pay for some business expenses, and the only reason I did it is exactly what you said, Phil. I saw the deposit address of the Bitcoin and it just stayed there the entire time. And when I paid off the loan, you on the Unchained, they have a dashboard, you signed with whatever hardware wallet you have and you get your Bitcoin back. That's it, so yeah. If you do decide to take that risk, because it is a risk at the end of the day, Unchained is the way to go. All the other companies, they rehypothecate. I also want to give a shout out to, of course, our guest, Phil Geiger. You can go follow him at Phil_Geiger. He works at the concierge service at Unchained Capital, and you can definitely go check out his Medium. All right, guys, that was our show. You know what to do. If you enjoyed the episode, smash that like button. And of course, if you want to continue hearing the Bitcoin news from the plop perspective and the catastrophic fiat and shitcoin fails, definitely consider subscribing. And we will see you tomorrow for another episode of Simply Bitcoin.